Recently, China's drinking water market has become highly competitive. Nongfu Spring has initiated a price war with extremely low prices, reducing the cost in some channels to about 0.74 yuan per bottle. Competitors Hangzhou Wahaha Group, China Resources Beverage, and Master Kong have also had to follow suit, intensifying the market competition. According to Chinese media reports, with the extensive market coverage of Nongfu Spring's purified water, various promotions have sprung up both online and offline, even pushing the price of mainstream bottled water below 1 yuan per bottle. In Nongfu Spring's Douyin live streaming room, they offer a promotion where each pack costs 990 yuan or 1980 yuan for 2 packs, equivalent to about 0.83 yuan per bottle. This promotion is nationwide and includes free shipping. People have noticed that Nongfu Spring's newly launched green bottled purified water offers the biggest discounts among major bottled water brands in several large chain supermarkets in Beijing's Chaoyang district. In a Wumart supermarket in Chaoyang district, a 12-pack of Nongfu Spring green bottle purified water sells for 8.9 yuan, roughly 0.74 yuan per bottle. In comparison, a 12-pack of Nongfu Spring red bottle natural water and China Resources Beverage purified water each sells for 10.9 yuan, and the 12-pack of Ganten sells for 11.99 yuan. Other supermarkets show similar trends. In many supermarkets and convenience stores in Changsha, brands like Nongfu Spring, Hangzhou Wahaha Group, and China Resources Beverage are running promotions, with the price per bottle as low as 0.8 yuan. Online, the discounts continue without pause. On Yonghui Supermarket's online app, after applying discount coupons, Nongfu Spring green bottle purified water is priced as low as 792 yuan per pack, or 0.66 yuan per bottle. Nongfu Spring's product information shows that the regular price for a pack of 24 bottles, 550 milliliters each, is 48 yuan, which is about 2 yuan per bottle. During the promotion, it's equivalent to a 59% discount. Consumers can also have their purchases delivered to their homes through Nongfu Spring's home delivery service at over 1,000 stores across China, with no additional charges for higher floors or lack of elevators. In April this year, Nongfu Spring launched the green bottle of purified water and quickly distributed it nationwide. Initially, both the green and red bottles were priced at 2 yuan each, but the green bottle soon saw price reductions to capture the market. According to Nongfu Spring, from May 31st to June 3rd, cumulative sales of the new purified water exceeded 1 million packs. On June 18th, the purified water product topped JD.com's new beverage rankings. The effectiveness of these low-price promotions prompted further price cuts from Nongfu Spring, shaking up the bottled water market this summer. As Nongfu Spring reduces prices for its purified water, other brands like Hangzhou Wahaha Group and China Resources Beverage are also forced to lower prices to maintain market share. However, in some community convenience stores or liquor stores, the price of Nongfu Spring purified water remains higher, ranging from 1.5 yuan to 1.8 yuan per bottle, with some convenience stores pricing it even at 2 yuan. A Nongfu Spring distributor in Beijing, Mr. Wang, stated that the price for Nongfu Spring purified water is 35 yuan for 24 bottles, which is about 1.46 yuan per bottle. They also have a promotion where buying 8 boxes gets 1 free, bringing the price down to about 1.3 yuan per bottle. Mr. Wang said, "The price of Nongfu Spring purified water will not go any lower. The prices of 8.9 yuan and 9.9 yuan seen in chain supermarkets are likely special deals for supermarkets used as loss leaders to attract customers." He noted that usually, bottled water prices remain stable at this time of year, with only some promotions around events like Double 11 and 618 Shopping Festival. This year, due to a tough economic environment and pressure from the Hangzhou Wahaha Group, the entire industry is experiencing a chain reaction, leading to widespread promotions throughout the summer. Mr. Wang remarked, "In the bottled water market, only brands like China Resources Beverage, Hangzhou Wahaha Group, and Nongfu Spring are running promotions. It's mainly a fight between the top brands, while others with smaller market shares can't compete." Reflecting on this round of price wars in the drinking water market, industry insiders believe it was Nongfu Spring's launch of purified water at prices below 1 yuan that triggered today's intense price competition. Some industry experts point out that summer is the peak sales season for bottled drinking water and the best time for brand promotions. However, a price war involves more than just lowering prices. It encompasses supply chain operational costs, brand influence, product quality, and other factors. Chinese food industry analyst Zhu Danpeng stated that Nongfu Spring's introduction of low-price purified water products this year has turned into a disruptor in the purified water market. Renowned strategic positioning expert and founder of Fujian Huasu brand positioning consulting, Zhang Junhao, commented that price cuts are not a long-term strategy and may lead to market chaos and damage to brand image. Why has Nongfu Spring slashed the price of its bottled water so drastically? According to reports from mainland media, the intense competition in the bottled drinking water and beverage market is putting significant pressure on Nongfu Spring. A report by China Insights Consultancy reveals that in 2023, the market size for packaged drinking water in China was 215 billion yuan, with a compounded annual growth rate of 7.1% over the past 5 years. The market is expected to reach 314 billion yuan by 2028. In 2023, Nongfu Spring held a 23.6% market share. China Resources Beverage had 18.4%, and other brands like Ganten, Hangzhou Wahaha Group, and Master Kong held a 6.1%, 5.6%, and 4.9% respectively. In addition to major beverage giants like Nongfu Spring, China Resources Beverage, Hangzhou Wahaha Group, Jinmai Long Foods, Ganten, and Master Kong, other big players have also entered the packaged drinking water market. These include Kunlun Mountain Natural Mineral Water by the JDB Group and Yingjia Spring by Anhui Yingjia Distillery, along with emerging second and third tier brands like Ru Tian from Jiangxi, Longwong Spring from Shanxi, Bama Lifelong from Guangxi, and Beite from Sichuan. This has further intensified market competition. Amid this fierce competition, Nongfu Spring's concerns have emerged. The company's main businesses include packaged drinking water and beverage products. Before 2023, Nongfu Spring's revenue from packaged drinking water was always higher than that from beverage products. However, this trend changed in 2023. Financial reports show that in 2023, Nongfu Spring's revenue from packaged drinking water was approximately 20.26 billion yuan, accounting for 47.5% of total revenue, while beverage products accounted for 51.7%. Additionally, Nongfu Spring's flagship product, NF Spring Green Tea, has faced increased competition. It not only competes with established rivals like Suntory, Hangzhou Wahaha Group, Uni-President Enterprises Corporation, Master Kong, and Coca-Cola, but also contends with emerging brands like Genki Forest, Hey-Tea, and Dayao. Under this intense competition, the price of sugar-free tea beverages is dropping from 5 to 6 yuan per bottle to 3 to 4 yuan per bottle. While Nongfu Spring grapples with growth anxiety, China Resources Beverage is accelerating its entry into the capital market. On April 22nd, its parent company, China Resources Beverage, submitted an IPO application to the main board of the Hong Kong Stock Exchange to raise funds for expanding capacity and market share. If successful, China Resources Beverage will become the 18th listed company under China Resources Beverage and the second leading domestic packaged drinking water company to be listed on the Hong Kong Stock Exchange after Nongfu Spring. The China Insight Consultancy report also indicates that in 2023, purified drinking water accounted for 56.09% of the packaged drinking water market, with a compound annual growth rate of 7.7%, and is expected to outpace natural mineral water in the next 5 years. Focusing on purified water, which holds the highest market share in the packaged drinking water market, is a natural choice to find new growth points in the bottled water sector. However, in China's purified water market, the largest brands are China Resources Beverage and Hangzhou Wahaha Group. Although Nongfu Spring is strong to gain a share in the purified water market, price is undoubtedly the most effective tool. Thus, Nongfu Spring's sudden introduction of low-priced purified water is seen as a strategic move to challenge China Resources Beverage and Hangzhou Wahaha Group in the packaged drinking water market. Some industry analysts believe that Nongfu Spring's price war may also be a response to its declining stock price. In early May, Nongfu Spring's stock price peaked, but has since fluctuated downward. By the close of trading on July 16, the stock price had fallen to 32.55 Hong Kong dollars, down nearly 32% from its May peak. To rescue its stock price, on the evening of July 9th, Nongfu Spring's controlling shareholder, Yang Shengtang, announced its plans to increase its H-share holdings by up to 2 billion Hong Kong dollars. Against this backdrop, Nongfu Spring's introduction of low-priced products to boost sales in market confidence is seen as a countermeasure to address the stock price decline and expand its main product base. Analysts believe this strategy carries risks and challenges for Nongfu Springs. A prolonged low-price strategy could harm its brand image. Additionally, selling green bottled purified water at low prices could impact the market performance of Nongfu Springs' main product, natural mineral water. Experts point out that the price war could redefine the competitive landscape of the purified water market. Long-term low pricing is not conducive to sustainable growth for the company. As bottled water is a daily necessity, price fluctuations directly affect consumer purchasing decisions. If one brand lowers its price, others may lose market share if they don't follow suit. This price sensitivity indicates that consumers generally perceive minimal differences between bottled water brands, leading to low brand loyalty. Macquarie Group published a report stating that due to aggressive promotions and increased investment in sales channels, Nongfu Springs' year-on-year sales growth in the first half of the year is expected to slow to 7.6%, with net profit dropping by 4.6%. The firm also predicts that the company's gross profit margin will narrow by 2.2 percentage points to 58%. However, during this critical price war period, Nongfu Spring faced another challenge: 3 micrograms of bromate. The Hong Kong Consumer Council tested 30 commonly available bottled water samples from different retail stores with capacities ranging from 500 milliliters to 550 milliliters. These included 3 distilled water samples, 3 purified water samples, 1 mineralized distilled water sample, 2 mineralized purified water samples, 17 natural mineral water samples, and 4 sparkling natural mineral water samples. The test mainly referenced relevant regulations from Hong Kong, the US, and the EU, as well as WHO guidelines and Codex Alimentarius standards to assess the safety and quality of bottled water products. The test checked for nitrites and nitrates, residual disinfectants and byproducts, plasticizers, bisphenol, microorganisms, microplastics, and metal impurities to ensure all bottled water samples were safe to drink. The Consumer Council found no samples exceeding the standard limits. However, in the investigation results announced by the Consumer Council on July 15th, 2 samples, Ganten and Nongfu Spring, were found to contain 3 micrograms of bromate per liter, reaching the maximum limit set by the EU for bromate in ozonated natural mineral water and spring water. Additionally, 1 purified water sample and 1 mineralized purified water sample contained 2 micrograms of bromate per liter. The Consumer Council pointed out that bromate is a byproduct formed when bromides naturally present in water are oxidized by ozone during disinfection. Ingesting large amounts of bromate can cause nausea, abdominal pain, vomiting, and diarrhea, and in severe cases affect the kidneys and nervous system. In response, Nongfu Spring sent a lawyer's letter to the Consumer Council on July 16th, stating that the report was based on a misunderstanding and unprofessional analysis, which led to unobjective evaluations of its products, causing significant damage to Nongfu Spring's reputation. They demanded a written clarification and apology from the Consumer Council. In the legal letter, Nongfu Spring pointed out 3 major errors in the Consumer Council's report. First, the company stated that its natural drinking water products should be evaluated according to the EU's drinking water safety standards, not their natural mineral water standards. According to EU drinking water safety standards, the safe bromate level is no more than 10 micrograms per liter. The safety standards for drinking water in mainland China, Hong Kong, the United States, Japan, and the World Health Organization also set the safe bromate levels at no more than 10 micrograms per liter. Nongfu Spring's natural drinking water has a bromate level of 3 micrograms per liter, fully complying with these standards. Nongfu Spring also stated its drinking water products strictly adhere to the production standards of both mainland China and Hong Kong. All bottled water must undergo disinfection before leaving the factory. The company criticized the Consumer Council for inappropriately applying third-party standards not relevant to products sold in Hong Kong, ignoring differences in production and technical backgrounds under various regulations, and not considering the effects of ozone treatment. They described the report's conclusions as extremely unscientific and highly inaccurate. The letter also criticized the Consumer Council's report for using unprofessional and intentionally misleading language. The company argued that standards should only be classified as compliant or non-compliant. The use of terms like upper limit or lower limit in the report could mislead consumers about the product's safety. Nongfu Spring also questioned the Consumer Council's warning that excessive bromate intake could cause nausea and other issues without defining what excessive means, calling the comments irresponsible and unprofessional. Nongfu Spring claimed that the Consumer Council's actions have significantly harmed the company's reputation and demanded immediate clarification, apology, and remediation. They warned that they would take further action if these demands were not met. Additionally, Chinese media reported that Ganten stated its legal department has already engaged with the Hong Kong Consumer Council. The Hong Kong Consumer Council responded by confirming that they had received a letter from Nongfu Spring's legal representative regarding the bottled water test report in the July issue of their Choice magazine. They are currently reviewing and following up on the matter. The Consumer Council reiterated that all 30 tested samples were found to be within the World Health Organization's guidelines for safe consumption, and emphasized that the article's main focus was on the value for money and environmental impact of the plastic bottles used, not the safety of the products. They assured all samples were safe to drink and would provide further updates as necessary. It's not just bottled water industry engaged in price wars. Many industries in China are experiencing fierce competition, leading to widespread price battles. For instance, e-commerce platforms, facing slow sales growth and intensified price competition, have resorted to large-scale discounts and generous return policies to attract customers. This has left sellers on these platforms struggling to survive. An e-commerce operator in Shanghai, Lu Zhang, told Reuters, "The good days of e-commerce are over." His platform helps small vendors sell daily necessities. He said, "This year, competition is extremely intense. I believe many sellers won't survive the next 3 years." China's economy is being weighed down by a prolonged real estate crisis and high unemployment rates, severely affecting consumer confidence. Reuters reported that while e-commerce platforms have benefited from extreme discount promotions, influencer sales, and generous return policies, these practices have hurt the very sellers these platforms rely on. E-commerce once accounted for 27% of China's retail market, but as the economy has slowed, growth has dropped to single digits in recent years, according to Euromonitor. During this year's 618 Shopping Festival, sale growth has slowed. According to data provided by Sintun, the total transaction volume, GMV, during the festival, which ended on June 20th, decreased by 7% compared to the same period last year, dropping to 743 billion yuan, around $102 billion US. This marks the first decline in sales from the 618 Shopping Festival. During the 618 Shopping Festival, the founder of the women's clothing brand, Inman, called for control over the return protection policy, which forces sellers to bear the cost of returns. Reuters reported that Davey Huang, business development director at e-commerce consultancy Azoya, stated that due to impulsive shopping, return rates have increased. Small retailers lacking sufficient cash flow to cover these costs are struggling more than ever. Retailers also feel the impact of factory direct sales. Professor Huling Shi in the Department of Economics from Monash University in Melbourne noted that some suppliers in Pinduoduo have been operating at a loss for 2 years. Lu commented, "Sales have not grown because there are no new customers. People's average income has not increased as it did 10 years ago." He added, "The competition is now between platforms and sellers. This is the new norm for China's e-commerce industry." Why do many industries in China prefer to engage in price wars? Chinese people generally face intense competition in education and employment, and even among businesses, there's a strong tendency to compete aggressively. Many business owners prefer price wars, which leads to fierce competition in product pricing and raw materials, squeezing profits thinner and thinner. Analysts believe that in the context of China's ongoing economic downturn, market competition is extremely fierce, especially in many industries where product homogeneity is severe and consumers are highly price sensitive. Therefore, lowering prices to attract customers is a common competitive strategy for companies. Moreover, Chinese consumers are generally very price sensitive. They compare the prices and performance of different products and tend to choose those with higher cost effectiveness. To gain a competitive advantage in the market, companies often lower prices to attract more consumers. Additionally, the channels and distribution networks are quite complex in some sectors or products in the Chinese market. Price wars may also be a strategy to gain an advantage in these channels or to control costs. Furthermore, some new brands or companies, to establish brand recognition and consumer trust in the market, may opt for price wars to quickly accumulate market share. Therefore, the preference for price wars in China can be seen as a reflection of market conditions and consumer behavior. It is a strategic choice for companies in the face of intense competition.